JPMorgan is right now the biggest bank in the United States, probably in the history of the United States.
JPMorgan.
JPMorgan.
Over the last century, of the notable bank mergers that have taken place, JPMorgan and its predecessors have been involved in almost 1/4.
It's the largest bank in America, more than $2 trillion in assets.
Right now, they're also the biggest bank in the world by market capitalization.
From the panic of 1907 to 2007, the subprime mortgage crisis and the financial collapse thereafter, JPMorgan Chase has been at the center of American banking for over a century. The company has an unabashed CEO, not afraid to speak his mind.
He weighs in on politics on a pretty frequent basis.
I was also telling the president that two of his advisors told him, and I'm not going to name them, but they told him there will be no retaliation. We said there absolutely will be, and they were wrong.
This man is a criminal. Probably the most notable banker of the past 25 years.
The company helps finance the largest economy on earth. And even after millions were hit by the Great Recession, JPMorgan came out bigger and stronger. That's likely just how JPMorgan himself would have done it. So let's start at the beginning. The man behind the empire, JPMorgan, was born John Pierpont in 1837 to a prominent New England family. After traveling Europe, Morgan returned home to launch his financial career.
His father was in many ways the most important person in his life. And his father, Junius, was a very straight shooter, very moral, very convinced that in the high-risk, high-stakes business of investment banking, your word is your bond, your reputation is everything.
In 1871, JPMorgan, along with the help of a former banker, Anthony Drexel, created a private merchant partnership called Drexel, Morgan & Company. It later became JPMorgan & Co.
U.S. was the emerging economy in the 19th century, in the middle of the 19th century, booming, busting, just going through all the growth patterns of what was becoming a major industrial economy. What they were doing was funneling investments from Europe to these American companies, not putting their own capital into the railroads. A little bit they did. When Morgan died, he had very minor investments in the companies that he had brokered.
Morgan became heavily involved in reorganizing and consolidating railroads.
If a railroad manager was suddenly playing fast and loose, cheating his investors, really getting his company into trouble, Pierpont Morgan would step in and fire the managers, hire new ones. Morgan was trying to monitor and discipline the companies who had sold securities to his clients.
Morgan's next target, the steel industry.
Andrew Carnegie had built the best steel company in the world. He figured out about economies of scale. He was able to outproduce and underprice all of his competitors. Morgan decided in 1901 that essentially he would do for the steel industry what he'd done for the railroad industry, which was consolidate a lot of smaller companies into one giant. And he put together U.S. Steel, capitalized at $1 billion in 1901. That was an unheard of sum for that time. And people were staggered, were horrified, were skeptical. He did revolutionize the financial markets.
And it wasn't only railroads and steel. JPMorgan was influential in creating what would later become AT&T. And he helped finance America's electrification.
His own house was the first private house ever illuminated entirely by electricity. His own private study caught on fire the couple of days after they installed the system, and he said, "Do it again, I'm not giving up." Morgan combined Edison Electric with one of his chief rivals, and that became General Electric in 1892.
Morgan was not without controversy.
What he was doing was very good for lenders from Europe, for wealthy people who had money to invest. It was very good for the growing American economy overall. It was not good for farmers and small businessmen who had to borrow money. He was basically keeping the dollar really strong. It cost them more to pay back their loans than what they had borrowed, and that was really painful. And there was a huge populist opposition to Morgan. It was very controversial and continued to be controversial.
Then came the Panic of 1907. It's regarded as the first worldwide financial crisis to hit the modern world.
The American economy was growing so fast and with so little supervision, so little government regulation, so few people who really knew how to govern it. There was a panic or a devastating crash and depression just about every 10 years.
Despite reporting strong corporate earnings, the stock market crashed and stocks plummeted on foreign exchanges. The U.S. government lacked the funds to stop the bleeding, and there was no central bank.
Morgan delegated two groups of men, one young lieutenants who would stay up all night and assess the health of these trust companies to see whether they were worth saving or had to be let go, and then two other senior bankers along with himself who would be making the top level decisions.
The group functioned as the country's unofficial central bank.
The New York Stock Exchange didn't have enough money to complete its trades, and the head of the exchange came across the street to Morgan and said, "We're going to have to close before 3 o'clock because we can't keep the trades going." Morgan said, "You can't do that. In this climate, it will make things so much worse. We've got to keep the stock exchange open." So he called several of the leading bankers to his office and said, "We need $20 million in 20 minutes to send across the street to the stock exchange." And these guys, without flinching, put up that money. It's evidence of how much they trusted Morgan, that they knew he was the guy who could stop this and he wasn't going to do anything tricky with it. Later that week, New York City couldn't meet its payroll. It went on like this for 2 harrowing, terrible weeks, and finally it began to subside. One of the headlines in the middle of this, something like, "Stocks stabilized for the moment and JPMorgan has a cold." He had a terrible cold, and as some of this was going on, he was just sneezing and coughing and making calculations on a piece of paper, but he was totally exhausted and not young.
While Morgan was celebrated on Wall Street for saving the economy, people quickly realized that perhaps one banker shouldn't have so much power.
For about a minute after the end of the panic, Morgan was an international hero. But the minute after that, the idea of that much power residing with one private banker really was not okay.
It set in motion a number of financial reforms, including eventually the creation of the Federal Reserve. But Morgan never got to see the Fed. J.P. Morgan died on March 31st, 1913, in Rome. The New York Stock Exchange was closed until noon on the day he died to honor his memory. His son, J.P. Morgan Jr., took over, and the company continued to play a prominent role in financing major American projects. In 1915, the bank facilitated the largest foreign loan in history, $500 million to the English and the French to support their war effort during World War I. When the Depression-era Glass-Steagall Act of 1933 forced banks to split from investment banks, J.P. Morgan & Company was broken up. Grandson Henry Sturgis Morgan went on to found Morgan Stanley. But that is the history for only half of what became today's J.P. Morgan Chase. The other side has an interesting history, too, that goes back even further, to the 1700s. Aaron Burr, famous for winning a duel against Alexander Hamilton and exiled after being tried for treason, but he is also credited with creating the earliest predecessor to J.P. Morgan Chase. He founded the Manhattan Company in April 1799. It sought out a charter that would enable the company to supply purified water to New York City residents in an effort to stave off yellow fever. It also got a banking charter to take on Alexander Hamilton's Bank of New York. In fact, J.P. Morgan Chase, to this day, has the pistol that Aaron Burr used to shoot Alexander Hamilton. After a slew of mergers over 150 years, it became Chase Manhattan Bank in 1955. While J.P. Morgan & Company floundered as a major player in finance, another company emerged, Chemical Bank. What started as a chemical company in New York City in the 1800s became one of the foremost banks in the Northeast. In 1969, it created the first cash dispensing machine that was installed in the Rockville Center branch on Long Island. Now, we call these ATMs. And all of that brings us to the major banking consolidation of the 1990s that created the behemoth that is J.P. Morgan Chase today. The global economy, technology, and the rise of Wall Street's political power got Washington to change the rules.
Deregulation from the 1990s came in two parts. One would be national banking and the ability to have greater efficiency. I still remember, to take traveler's checks if you went from the East Coast to the West Coast. I mean, how inefficient was that?
Chemical Bank merged with Chase Manhattan in 1996.
Huge bank merger is in the news this morning. Chemical Bank and Chase Manhattan are joining forces to become the biggest banking company in the nation, with assets of nearly $300 billion.
Then, in 1999, the law that originally split up JPMorgan and Company in the 1930s was repealed.
Today we proved that we could deal with the large issue facing our country and every other advanced economy in the world.
Now, the elimination of Glass-Steagall, that was much more controversial.
I believe this legislation in its current form will do more harm than good.
In 2000, Chase merged with JPMorgan to create the country's largest bank.
Chase had a very good brand name, but we think JPMorgan is a better brand name.
And that gave a little extra cachet. JPMorgan, a good brand name, long legacy. But despite the vision was to better compete against like Goldman Sachs and Morgan Stanley and Merrill Lynch. The banks, they were second tier.
Size didn't equal success in the early years.
I mean, these were big, bureaucratic, error-prone, lumbering giants.
But the consolidation didn't stop there. The company merged with Midwest giant Bank One in 2004.
It's the biggest financial deal to hit Wall Street in 6 years. JPMorgan buying Bank One for roughly $58 billion in stock.
We negotiated, and I think what we did is going to be great for our shareholders.
JPMorgan, wow, look how far they've come. 5 of the 8 money center banks of the 1980s are in JPMorgan. In fact, over the last century, of the notable bank mergers that have taken place, JPMorgan and its predecessors have been involved in almost 1/4.
That set up Jamie Dimon to be the next CEO of the company.
To me, as a bank analyst who has covered the space for 3 decades, that was a defining moment. That was when JPMorgan and its legacy firms got a new religion. And at some point, the platitudes got pretty heavy. I mean, fortress balance sheet this and fortress balance sheet that. And, he's a fast talker. A lot of good signs from Jamie Dimon, but there was also a degree of, okay, the jury is out on this leader, Jamie Dimon.
While there are lots of external factors we cannot control, we must expect increasing tough competition around the world.
I would say a defining moment also happened during the financial crisis, and that would be the acquisition of Bear Stearns.
The firm that I keep hearing that's most likely to buy it will be JPMorgan Chase, obviously helping with the bank, helping with the financing, the bailout.
And that showed the value of having a fortress balance sheet. It showed the value of having strength when others are weak.
Just like 100 years before, JPMorgan had to grapple with a collapsing financial system.
I called up my whole operating committee. I told them we're about to have a catastrophe take place. All hands on deck the next day. I think I called my board that Saturday and said, we have a national emergency.
And when you told them how bad it could get, what did you tell them?
You're going to see the worst week ever in American financial history since the Great Depression, that in my opinion Lehman's going to go bankrupt, that AIG is a possibility, and that it might be a domino effect after that.
But the company kept playing a role as a buyer.
JPMorgan Chase followed up with the acquisition of WAMU.
And the company emerged from the crisis stronger.
If you made one move more than any other, if you were investing in bank stocks since 2004, it should have been to own JPMorgan Chase as an investment. Since the Bank One merger for the last 15 years, JPMorgan Chase has outperformed the bank stock index by an average of 600 percentage points each year. That's tremendous outperformance versus the banks.
Despite the company's relative strength, Dimon was called in front of Congress to defend the bank's actions after the industry received more than $700 billion in government bailout money.
The question that I nor anyone will ever be able to answer is what would have happened had that not been injected, when and how it was injected.
He even called for more systemic regulation.
I think it would be a tremendous benefit to have one regulator looking at anything that can cause systematic risk.
Well, I would make a distinction between regulation and red tape. So Thank you, regulators, for making the banking industry stronger than it's been in a few decades. And they've done it with very clear rules. Okay, you won't have as much leverage, which means more capital, and capital protects banks from unexpected problems during tough times.
But it hasn't always been completely smooth sailing for Dimon at the helm of J.P. Morgan.
The annual shareholder letter from JPMorgan Chase CEO Jamie Dimon, it addresses the London whale issue right off the bat. He says it was an extremely embarrassing episode, the most embarrassing episode that he has ever dealt with, and it also cost the firm money.
The company lost more than $6 billion on the trade, and Dimon was marched in front of Congress again.
This man is a criminal. When the small businesses can't get the same loans, when the people are deprived loans to get into their houses.
Well, I went to the annual meeting after JP Morgan had the London whale incident. It was down in Tampa, Florida, and I went to ask questions of the lead director to find out how much the board was overseeing Jamie Dimon and the rest of the management team. So it was certainly an issue. And JP Morgan Chase said, we still earned money that quarter. Yeah, that's kind of like, okay, you're texting while driving. Never do that. You hit the guardrail and you cause $500 worth of damage to your car. See, it was only $500. No, the point is you could have gone off the edge and killed a few people. Okay, it could have been much greater damage than it was.
And in 2013, J.P. Morgan settled with the Department of Justice. The charges were that the company overstated the quality of mortgages it sold to investors in the run-up to the financial crisis. It cost the company $13 billion. Overall, J.P. Morgan Chase has settled more than a dozen government cases and private lawsuits in connection with the financial crisis. That's according to a CNBC analysis of KBW's litigation tracker. Some of the settlements were liabilities from the Bear Stearns and WAMU acquisitions. In total, though, they've cost the company more than $30 billion. While there still is some outstanding litigation, for the most part, the company has put the crisis behind it.
JP Morgan Chase has gained market share. It now ranks number one in global investment banking and trading activity. That's from a second and third class status a couple decades ago. Now they're number one. On the retail side, JP Morgan Chase, especially Chase, the retail brand name, they rank number 1, 2, or 3 in most categories, and they rank number 1 in digital banking, an area of tremendous growth. So now you look at it, and for the last 10 years, despite flat market share, JP Morgan has improved its deposit market share nationally from 7% to over 10%. Who's using JP Morgan Chase more than ever before? Young people, millennials.
They're taking all these processes that used to be very paper heavy or very sort of people heavy, like you had to go to a branch, and they're turning that to digital, and they're putting it so that if you wanted to apply for a mortgage, you could do it through your mobile phone. If you wanted to trade stocks easily and for free, you could do it through the mobile phone. They also have something called Sapphire Reserve. It's a hugely popular credit card that they rolled out in 2016. Tons of millennials have bought into that, primarily because they get extra points, reward points, for things like dining out and travel, things that millennials supposedly like to do a lot. This is a play to get people relatively early on in their financial lives.
I mean, do you think millennials wake up and say, oh, we want to do business with a big institution, a big bank? That's not the thought process. The thought process is, hey, they have better digital banking. They have better online banking. They make our lives easier. Let's go to JP Morgan Chase. You're seeing this at some other banks too, but JP Morgan Chase certainly is a leader in that category.
And what would J.P. Morgan think of the company bearing his name being back at the top of banking?
I think that was perfectly appropriate.